how to actually apply the direction. Okay, so you've seen my video on the theory of direction where you are looking at an engulfing in a higher time frame, waiting for another engulfing on another lower time frame to be formed, and blah blah blah, all this. But how do I apply it with a setup? And so this is what this video is going to be about, right? So if you've not seen the video on direction, you have a link in the description, and then you can go and rewatch the video and come back to this particular video, and then you see how I'm going to apply it. And then one thing is that don't take this example as a trade that I've taken. No, this is an example that I've looked for to just be able to explain what I've been talking about. Okay, it's not a trade that I took. Well, if you see me doing an example on gold, probably that may be a trade that I've taken because that is one of the pairs that I trade. Okay, I trade gold mostly. I've stopped trading any other pair and I trade only gold. Okay, if I have a setup, I take the trade. For instance, today I didn't have a setup. I didn't trade. All right. So let's go on. All right. So the first time we had direction, we said that you are looking for a higher time frame engulfing. So this particular video is going to be the direction on the higher time frame engulfing plus setup. So in this case, I'm using Euro NZD, a pair that I used to trade a lot. Okay. So I'm going to the weekly and I'm going to show you something. Okay. When you take this part of the chart, on the weekly chart, okay, when you take this part of it, you notice that the market is going up, right? It's going up. And therefore, these are the highs that are being broken as the market is going up, okay? So this high was broken. This high was broken too. This one was taken. All right. So now, in terms of structure, this is the engulfing that when broken, we are going to say that, well, yes, the market is still in the downtrend. So this is a pullback, but a complex one, a complex pullback, right? If a market closes below this particular engulfing, then it means that structure has been broken and therefore we are in the downtrend. Okay, so in this case, we are still up. So this is the engulfing that you are looking for price to break. So this is the level. All right. So in terms of direction, you realize that whenever price comes there, it goes up, comes, goes up, comes, goes up, right? So therefore, we know that now, when are we going to say that we have broken structure on this one? Okay, this wasn't a break of structure because this low couldn't create a lower low. It wasn't lower than this, right? So this is also a complex pullback, right? So for structure to be broken here, this, you have to close above this. Then we know that this is done, right? By now, we know that we are still going down. So now I want to look at this engulfing zone and then try to find a buy zone. So on a weekly engulfing, what a strategy says is that you need to find what a daily engulfing after price touches the weekly engulfing. Okay, so go to daily. Price comes in, right? Price comes inside the zone here and create an engulfing. This is an engulfing. Okay, this is an engulfing. Do it properly. Yeah. Okay, so I'll use a line so that you can see it clearly that it was an engulfing. Okay, so make it long. Right. So you can see a bullish candle closing above what? The lowest sell candle. So we close above. So we have an engulfing. And therefore, because we have an engulfing on the daily, we can say that yes, bullish trend is starting. But where is the confirmation, the full confirmation of the bullishness? Okay, that will be on the daily. That will be when we break this level. When you break this level. Okay, until we break this level, daily, yes, daily has a confirmation of the weekly direction, okay, but it's full confirmation when you break this level. All right, so now that daily has created an engulfing here. Where is our sell zone? Oh, our buy zone, sorry. Where's our buy zone? Our buy zone will be this engulfing, okay, this to this. So we wait for price after this break to come back inside. Therefore, now we have a daily direction. a weekly direction confirm in a way. Now that you have this, you need to confirm if this daily engulfing has created a 4-hour engulfing field. Okay. And this is here. You have a 4-hour engulfing field here. Okay. A 4-hour engulfing field here. And then, okay, we have a daily engulfing and that's created a 4-hour engulfing. So it means that yes, 4-hour has broken structure and direction, daily direction is confirmed. Okay, weekly direction will be fully confirmed here. But you know the rule says that for a weekly direction to confirm, daily has to what engulf and 4 hours has to what create an engulfing phase. So you have a confirmation of daily direction. You know we are going up. All right. So now what will come in? Setup. We are looking for setup. So you have after this, you have one beautiful biastral setup here, which is what the QMR, okay? And I explained the differences between the QMR and the QMC. And I said the QMR occurs, okay, at the top or at the bottom of a trend. So this is a downtrend. QMR has occurred here. Okay, so where's the QMR? So we have this low, okay? So yes, this high, okay? This lower low, and then this higher high. Okay, you can see it on the line chart. Easy. Low, high, lower, low, higher, high. So we have a pattern. Okay, so let's draw out our pattern. So I draw it using the close of the candle. So I draw it out here. All right. Is that enough? Yes. So opposite it, we have a rally, a base, and a rally. So there's a base opposite it. This gives you a solid confirmation on the 4-hour. Okay. So now we have a 4-hour engulfing here, all right, which is opposite the QM, okay, which is a rally based rally opposite the QM, which is a full confirmation of what a biastral setup. Therefore, we can start looking for trades around this level. Let me go back to the 4-hour and then mark that level. Okay, so this is the level. This is the base. Okay, so this is a range where we want to be bias. Okay, so this is a range. Okay, so now that you have marked this base is your entry. Okay, when price touches this base on the 30-minute, this is important. This is what I'm going to say is important. When price touches this, okay, on the 4-hour, the first point of monitoring, okay, from here, when price touches this level and you get your trade, the first level of monitoring is this, okay, this engulfing field. Why? Because you have a storyline of a 4-hour engulfing to a 4-hour engulfing, okay, a storyline of a 4-hour engulfing to a 4-hour engulfing. Once this 4-hour engulfing breaks, what do you have? You have a storyline of a daily engulfing to a daily engulfing. So your storyline becomes daily to daily. Okay, this particular zone. Once this particular zone breaks, you have a storyline of what? A weekly to a weekly direction. Okay, right. So now you see, so the thing is that the market moves in a certain kind of chronology, okay? So from one time frame to the other. And if the market is going to go to the 4-hour engulfing, it cannot get there if a 30-minute engulfing is not broken or a 1-hour engulfing is not broken. If the market has to go to a daily engulfing for a sell, it has to break at least a 4-hour engulfing field before it goes there. So that is how you exit the trade. If I traded on 5 minutes, I will be monitoring the 5-minute engulfing to expect it to break. Then I'll be monitoring maybe the 30-minute engulfing because I've took the trade from a 30-minute engulfing. Price came to the 30 minutes ago, created a 5 minutes kind of engulfing. So on the time frame that I'm taking a trade, I'm monitoring the next resistance on that same time frame to expect a break. When it breaks, it means that, okay, that point of interest is going to hold till it reaches that the opposing point of interest on the same time frame. I'm just hoping I made sense. All right. So thank you very much.